What's going on, everyone? We hope you had a great, relaxing weekend and are ready to close out the final few trading days of 2024 on a great note. There's a lot going on in the market right now. As we all remember, on Friday, it was kind of a bloodbath as 90% of the S&P 500 closed down in the red, and there's a handful of important things happening in the market right now in multiple different senses. The first thing is we actually saw a horrible plane crash in South Korea over the weekend that Boeing is certainly tied to, which is, really bad. At the same time, there's also some very, what we'll call interesting statistics about what the market normally does in situations like it is in now. And at the same time, we are seeing volatility increase across the board. So we're set for an exciting week.
Yeah, we definitely are, Mike. And first things first, I guess the holiday. We're here again. We have a short week. There's no trading on Wednesday, January 1st for New Year's Day. So be ready for another short week once again, just like last week. There's not going to be any early closes or anything like that, but definitely watch out on New Year's Day on Wednesday. But Mike, getting back to the overall market, that was a bloodbath on Friday. Like, I cannot believe that heat map. That is one of the more bloodier ones that we've seen in quite a while, and the chip stocks keep selling off. But the craziest news, I think, was really that plane crash news. And of course, Boeing is tied to this. Boeing has been ripping up quite a bit over the past few weeks, and heading here into the end of the year, they had a great recovery move, but this plane crash might end up ruining some of this recovery here.
Yeah, so talking more about it, basically this was actually the worst airline disaster in the history of South Korea, which is horrible to say. 179 people died. Investigators are saying that it could be tied to like bird strikes and weather conditions. So, obviously horrible situation and very devastating in a stock-specific sense. Keep a close eye on Boeing. And like you said, Tom, it looks like this might send Boeing in the same trend it has been over the past couple of years, because this company's been just a disaster.
It really has. Ever since COVID, they have been selling off in a crazy, crazy way. And I mean, Boeing was a pretty big name before COVID. It was recovering up really well from the financial crisis in 2008. And then, of course, now we're seeing that massive pullback here on the daily chart. And over the past few weeks, we've been seeing a great recovery off of the trend and off of some good supports. But I would expect that this could end up making it fall back off. Boeing just has bad news after bad news. And they've been recovering up a little bit here as, they've been trying to turn things around. But as we know, a crash, especially as deadly as this, is never good news for an airline. So definitely be ready. And I know Boeing's not an airline, but of course they're the maker of multiple aircrafts. And Boeing's a big name out there. I know a lot of people definitely respect them. And something that's interesting is that Boeing also has a strong negative correlation to SPY recently.
Very, very interesting. So either way, let's keep a close eye on this one in the short term. But some stats that I came across over the weekend that I thought were extremely interesting basically shows what the market normally does during the first year of a president's second term. And it's a lot worse than most people would expect. So the first thing to consider is that most of the time the market rises for multiple different reasons. When we look at the first year of a president's second term, the average return is not only negative by 1.2%, but the median return is negative by 8.7%, which is a pretty big deal. And, as we look at this, Tom, you actually brought up a couple interesting points that, I thought could kind of explain this data.
Yeah, it's pretty interesting here, and I think that the main thing is that these presidents, when they go into their second year, they don't have to be as worried about public opinion or re-election, so to say, so they might do some stuff that, like, let's say, might help the economy over the longer term, but of course it might cause some short-term volatility or some short-term fluctuations, and then of course they still have 3 years to kind of, mend their reputation, like let's say if they mess up here their first year. So I don't know. I found this very interesting, Mike. Something that I thought was also interesting is that once we get to 1973, all of the more modern presidents in their first year have had a pretty good one, but all of the ones from, like, we'll say those those 1985 readings and older were a little bit negative. So I found this data to be extremely interesting, though, Mike. And if we do end up seeing Trump, let's say, try to enact a bunch of tariffs or something like that right off the bat here, that could end up maybe dampening that first year.
And like, that's the thing, because investors like certainty. And if Trump comes in here guns blazing and tries to shake up a bunch of things, it can certainly offer some long-term benefits. But, it shouldn't be surprising that there's, volatility to happen from that. So either way, keep a close eye on just this situation going forward. I personally think this is one of the most interesting, data sets that we looked at, in a sense like this, but time will tell. And, the job of any trader is just to adapt to how the market changes. The market has been extremely bullish over the past few years, and that's amazing. But at the end of the day, if it, weakens, then you just have to adapt to it, and, you got to do what's working.
Yeah, and there's been some big changes in the short term, Mike. I know that the overall market's been pulling back a little bit. Look at the SPY daily chart right here. I mean, that pullback on Wednesday of last week was brutal, or a couple weeks ago, I should say. But whenever we look at the SPY this week, of course, Friday was a pretty bad sell-off. And I will say these big tech stocks really fueled this sell-off as well. NVIDIA was down 2%. We saw a lot of the other chip stocks like AVGO, AMD, and others also down into the red. A lot of these are also getting close to some pretty major supports in the short term. So it's getting pretty brutal out there for a lot of these bigger tech stocks. And just going back to the heat map again, it was so bloody. And even Tesla down 4.95%. These are some pretty big moves out there. It's not like they're just falling 0.2% or something like that either.
And exactly, and it's not even just a specific area of the market. It's just all stocks in general, whether it be Tesla, NVIDIA, Apple, Microsoft, or even what we'll call smaller companies. We are seeing selling pressure right now, and not all stocks are created equally in the market. And, when we look at the recent weightings of the S&P 500, we could see that Apple, Microsoft, and NVIDIA are the top three stocks right now, and they make up over 20% of the entire S&P 500. Three stocks make up over 20% of the S&P 500. That is crazy, but, what it ultimately shows is what Apple, Microsoft, and NVIDIA do has real effects on the market as a whole. So over these next couple of weeks especially, you have to keep your eyes glued to these big tech stocks because they quite literally run the market.
Yeah, and it's crazy to say in the short term because they've been fueling the market to the upside all through 2024, right? And we're about to end the year, and this is going to be known as one of the best years in the market, right? But whenever we look at these tech stocks, they are getting a little overextended, and as of last week, some of the pullbacks on those three specifically, Microsoft, Apple, and NVIDIA, are starting to look pretty rough. I mean, look at Microsoft, how far it is off its highs. NVIDIA is very far off of its all-time high. I guess not too far in the grand scheme of things, but, considering how it's done this year, I would say pretty far off, and a lot of these are starting to turn back over after this recent recovery as well. So that's another negative that I am definitely worried about here. But something that I thought was funny about the weightings chart, Mike, is it's just funny to see how these weightings change over the years. We go from oil stocks, Walmart, and Procter & Gamble to three tech stocks here now running the show over the course of 20 years. This is just such a crazy chart, and it's crazy to say that these tech stocks have that much influence.
I wonder what the weightings are going to look like for the top three stocks in 10 years from now and then 20 years from now. I'm very excited, and I hope it's Palantir in the top three, but we'll see. They have a lot of work to do. But anyways, continuing on, looking more at the S&P 500 right now, we are seeing some lower high action, Tom, and to be honest, it does concern me quite a bit.
Yeah, and we talked about this a lot last week, and we saw it start to really play out very well on Friday. And this is pretty much what we were worried about with the S&P 500 throughout the majority of last week. We kept talking about these possible lower highs starting to form at these major resistances. Of course, $600 was on watch, but even the major resistance around 602 to 603 has held up extremely, extremely well. And with this lower high starting to form now, and with the trend holding up, I'm definitely going to be watching SPY back to the the downside a little bit more. And I do like the low from Friday as a good support to watch right around the 590 to 591 mark. So if we can really get a good breakdown below 590 here this week, I think that that'll break this this higher low trend here over the past few days, and I think that'll start to show some more selling pressure. So I'll be watching for that 590 breakdown, and then I'll be watching for this lower range down around 580 to 585 to start to come into play a little bit more.
All right, sounds good. And then like even that 578 level that the market bottomed off of on December 20th, that's going to be crucial as well. And if that breaks, that will be a very concerning sign. But at the end of the day, the market is showing some signs of weakness. Volatility is increasing. So in the short term, we are going to see bigger, stronger moves in both directions. You have to protect yourself no matter what. Now is the most important time to have a stop loss because the moves are going to get bigger in both directions. So keep that in mind and be ready for some crazy action, especially over these next couple of weeks when Trump gets inaugurated. Because I have a feeling there's just there's going to be a lot of change happening, and that can move markets in quite a big way. So keep that in mind. Looking at the schedule for this week, it is basically a ghost town. We could see that the economic schedule has one real event, which is the ISM manufacturing PMI data that releases 30 minutes after open on Friday. Besides that, we are all in the clear, and then the earnings is a complete ghost town.
Yeah, completely empty on the earnings here. So again, we can just kind of focus on this end of year price action and hopefully have a great week here, right? I will say a lot of these fun stocks in the short term, like the quantum stocks and a lot of these stocks that have been hot, started to pull back a little bit on Friday, but I'm definitely still going to have these on watch as well. While they are pulling back, they're still pretty dang close to their highs, and I still think that there's a chance that they could get some more momentum going. So still keep your eyes on some of these hot sectors like the quantum stocks too.
No doubt. And then like another thing to keep in mind, like if we jump back to earnings, is that we are going to see earnings season ramp back up again in just a couple of weeks, because we could see the big banks report like in that second to like third week of January. So that'll be pretty exciting. And before we know it, we're going to have all the big tech stocks reporting. So it should be a pretty exciting start to 2025. But besides that, let's get right to the good stuff, which are some setups and predictions. A stock that is close on my radar, and a lot of people aren't going to like this, is NVIDIA to the downside. Basically, NVIDIA has been showing relative weakness in the short term. This stock topped off right around, you could say, $153 a share or so towards the end of November. Ever since that point, it has been mostly chopping around, which is fine, and that's okay. What I am not liking in the short term is that it is having, when it does sell off, it is starting to sell off with more and more momentum than it has had in the past, which shows that just like the supply and demand dynamic is shifting more to the bear side. Given the recent chop and the increasing bearish momentum, definitely has this stock on my bearish radar, not specifically for tomorrow, but just like over these like next couple of weeks or so. If we do see a real sell-off in the market, I do think NVIDIA definitely has a lot to fall by, but either way, it's on my bearish radar, and we'll see what happens.
Yeah, I'll be watching it to the downside as well. I'm definitely a bigger fan of a pullback here with NVIDIA. I'm definitely watching like the 130 support to 125 support in the short term. But with my first play, I'm looking at another stock down, Mike, and this is going to make people sad again. With the market turning over here in the short term, just keep in mind, guys, it's going to be a time to adapt. And I'm definitely going to be watching Palantir at this major support. I really like this 77.50 support where Palantir has been holding and bouncing, especially the past couple trading days. Palantir has been able to hold this area very, very well. I'll really be watching this for a breakdown this week. If we see a drop under 77.50, I'm just going to keep watching for a further breakdown as this double bottom starts to give out. So I'm looking at Palantir to the downside. Of course, if we wake up Monday morning and the market's ripping back to the upside and Palantir's breaking out, don't trade it down, right? We have to see a clear break of these levels and some good bearish action.
All right, sounds good. Another stock that is close on my radar is Hims, and it is to the downside. I really like this company for the long term, but in the short term, they've been weakening quite a bit, and their price action on Friday was pretty brutal as the stock fell by nearly 7%. I just feel like right now this stock is extremely volatile, and they're still in like a relatively early stage of their, company's history, at least in the grand scheme of things, and they're a lot more volatile than most other stocks, as we can see by the 7% move on Friday. I think we're in a broader trend right now of, Hims moving to the downside over like these next couple of weeks or months. It has had so much hype with it over the past year, and some of that is starting to fade, and it's actually leading the move down relative to many other stocks, which in my opinion says something in definitely a bearish way. But either way, Hims is on my downside radar. It's not just for tomorrow, but it could be a play that can last for some time.
Yeah, this is a pretty crazy setup here. I really like the resistance hits right around that $30 mark, and I will say it almost looks like a head and shoulders pattern for all the pattern traders out there, but I really do like that resistance in the short term. I'll be watching it back to the downside as well, but with my next setup, I'm looking at Tesla to the downside. Poor Tessie here has been starting to form some lower highs on the daily chart, and we've been loving, or I've at least loved the move with Tesla to the upside, and I thought it was fantastic, but we are starting to see it slow down just a little bit in the short term. So I'm going to be watching Tesla very, very closely for another breakdown. I noticed that the low from Friday was right around the 426 to 427 mark. And going over to the Bookmap, there is a lot of buyers stacking up around 425 to 427, right within this range. So I will be watching for the 425 mark to break. If we break that, I'll be watching for a test of 420 to 421. I think there could be a good $3 to $4 move there in that gap. So I'll be watching for a breakdown with Tesla coming up this week. I've been loving the overall uptrend on it, but hey, you have to adapt when tides start changing.
You know it. All right, well, sounds good there, and we are all set for today's momentum plays. And with the first one, we have Beyond to the upside.
Yeah, Beyond Meat actually surprised. Did very well Friday. If they break out above $4.20, keep watching them up.
All right, with the next one, we have SoFi to the downside.
SoFi is one of those growth stocks that is starting to turn over quite a bit. If SoFi starts to break down below 1580, keep watching it down.
All righty, and then with the last one, we have Coinbase to the downside.
Poor Coinbase in the short term is also pulling back. So if they start to break under 263, watch Coinbase to the downside as well.
All right, so we have Coinbase and SoFi on watch for potential moves lower, and then we have Beyond on watch for a potential move higher. These three stocks are on watch for potential momentum plays where they are only plays if they break through the levels listed. The stronger and more consistent these stocks move, the better these setups become. These stocks are volatile, so you really have to adapt and flow with the trend changes as they happen. And as with any trade, you need to protect your risk. You need to have a stop loss because if you don't, you're kind of just driving blind. So either way, keep these three stocks on watch for potential momentum style setups for tomorrow. And besides that, Tom, it is now about that time for today's $392,000 big money trade. And we are looking at ticker symbol BSX. So BSX on Friday had a big money trader buy the 91 strike put options that expire on January 24th of 2025. Again, this is just under a $400,000 trade. These put options are already in the money. There is about a month's worth of time to these options, so the big money is expecting a pretty decent move in a relatively short period of time. What I do like about this setup is that it does have some pretty heavy resistance right around that $92 area that the stock has really struggled to get past. So that is a nice, clearly defined level of resistance, which can be great for risk management. At the same time, these put options are already in the money, and we are seeing broader weakening across the market as a whole. So I think this is definitely an interesting setup to keep on the radar. But if we do see a break above that $92 area, that would not be a good sign.
Yeah, if we do start to break 92, I will be pretty worried. That could be a good stop loss area on this. Of course, it's always better to follow the big money, but this is a pretty short-term play expiring January 24th, so not too much time to it. And I will say that overhead resistance is held up very, very well. I would definitely look for a test, maybe back to the bottom of this recent range at least, right around like 88.50 to even 88, if we don't even break lower. But overall, I like it down quite a bit in this range, and the big thing is just, is that resistance going to hold, right? Because that is such a crucial level, like you mentioned.
There we go. Well, before we continue on, we have to give a giant shout out to today's member of the day, Hockey, in the Stocked Up trading floor. They had a great post on Friday showing some nice gains with RGTI and Google. So huge shout out to you, Hockey, and keep up the great work going forward. We're definitely set for a very exciting 2025. If you guys are new to the Stocked Up YouTube channel, welcome, and consider obliterating that subscribe button. We post brand new videos all the time. It takes us hours to make these videos, and we cover everything you have to know about the market in usually 20 to 25 minutes or less. We cover big money trades, important news to be aware of, earnings, economic events, and charts that you'd never otherwise see. So if you want to get our videos recommended to you more often, consider obliterating the subscribe button and joining the Stocked Up crew. But besides that, like we said in the beginning of the video, this will be the final few trading days of 2024, and then we have a crazy, crazy, crazy year ahead of us. So it's an exciting time to be a trader. We're pumped for 2025, and we hope all of you are as well. But thank you all so much for watching, and let's crush it in the market this week.